Another one, Paul here. Today I'm going to be covering a options trading strategy, and on this channel I've covered a lot of different methods that you can do for options trading. There's a lot of topics for options trading, but this strategy is kind of going over what I've been talking about for the last couple days, and there's a lot of good formulas on this channel, but this one is kind of like, well, the last couple videos I've talked about the strategy with the 5-8, and I'm going to kind of show you how to use this strategy to make some pretty good find good moments to get in with the options trade. This is kind of a strategy I've come up with on my own. I'm pretty sure a lot of there's probably videos out there on this kind of strategy, but it's kind of like my own personal formula when it comes to doing forex and options, and if you know, this strategy will work for all three of these different kind of methods. So I'm going to kind of walk you through. We're going to look at a couple stocks, and I'm going to show you kind of like the formula of how I do it. In my opinion, is very profitable. Now with this strategy, you focus, well, at least I focus on the hour chart. The lowest time frame is 15 minutes. So if you guys want to follow along, I do not do the shorter time frames. These are more longer plays with this strategy. But anyway, let me guys run you through the strategy on how to be more profitable with options trading. Okay, so I'm going to do a couple stocks with this strategy. Now, a couple days ago, I did talk about McDonald's, and I'm going to start with that one, but I'm going to move into a couple other ones to show you the strategy works for any stock, really. I'm on the hour time frame, and if you guys have been following my videos, you know that I use the 3S MMA to have my 5 and my 8 on here. And that's really the moving averages that I use. I don't have the moving averages on here to make my decisions. I have my moving averages on here to see what the overall direction is. So I don't use my moving averages to make my plays. I use it to see the overall direction. So, I mean, you can do it with moving averages, but I found that this strategy works better without it. So you also need your relative strength index. So the whole strategy is real simple to do. What you want to do is you want to find a moment in. Now I'm on the hour with McDonald's here. You want to find. Let's just wait for a moment where it's closed. Let's find an open and close moment. Okay, we got one right here. So you want to look at your RSI, you want to look for the moment that the purple line is either crossing up or crossing down. So obviously if it's crossing up, you're going to do a call. If it's crossing down, you're going to do a put. So what I do is I find that moment where it's crossing up, which is right here. Then I will draw in the vertical line. And the vertical line is very helpful. You want to draw a line at every moment where it starts to cross. So you put it right there. So basically what you want to do next is, you want to make sure, because the RSI is crossing up, you basically just want to use your moving averages to see. Now, this is very important. You want to make sure that if your RSI is signaling that it's crossing up, you want to make sure that your moving averages are also in that same direction. So the RSI is pointing for a uptrend. You want to make sure that your moving averages are also going up, or it looks like it's about to, or it doesn't have to be like right at that instant, but it has to look like it is about to go in that direction. If the RSI is going up and the moving averages is going in a different direction, that is a bad trade. There's two times to not do this trade. The first one being if the RSI and the moving averages are not in sync with each other. The other time is basically when the RSI is the moving average. The yellow line is more in the center, and it's kind of going at a sideways point. You'll be able to tell and see, looking at that. But so basically what you want to do is you just write it out. Now, you use the, what line is that? That's a vertical line. You use the vertical line to put your entry point. So at this point, I would have come in at McDonald's right here, and I would exit by looking at the moving average. And I would look at the moving averages, and I would base it off of looking at the line. So you want to make sure that when it has crossed in that direction, that it, you're basically in the clear as long as the lines do not touch. So you could basically write it out till up here, which it shows with the moving average line. So you use the RSI to put your entry point. You use your moving averages to get your exit point. So basically you would write it out from here all the way up here, because this is where it crosses on the moving averages. So now this play right here, this is a 13-day. So if this was like Forex or something like that, it would be easy to do. But since this is options trading and you have to buy contracts, you could do it only for a couple days. You can only do it for maybe 4 days, maybe a week. You could buy maybe a week contract and you'd be fine. So this with McDonald's, let's just do it right here, 6 days. This would be a 6-day contract from the point it crossed on the relative strength index. This is a $6 difference in price. So let's go over to Robinhood real quick and see. Okay, just to get an example here. Okay, so McDonald's, that was a what? That was a 6 days, about a $6 difference in price. So that was 6 days, $6 difference in price. So let's look at the price of McDonald's here and see what a $6 difference in price would be. So let's just go from $2.90 to $2.96 to get a good estimate. $2.96. Okay, so that move with McDonald's, trading McDonald's, that was about $563 in 6 days. This is why I like trading with McDonald's, but I'm not going to make this video about trading McDonald's stock. I do have a video for that, so watch that one. And what I'm going to do is I'm going to do McDonald's one more time, and then I'm going to go look at this strategy with some other stocks as well. So, okay, so we see right here, we look at the RSI. The RSI is going through. So I would draw a vertical line right here where the RSI crosses. And then I double check the moving averages to see if it looks like it's going to cross in that direction. And it looks pretty good. So then I would just write it out till the moving averages cross back again. Either that or my contracts are getting pretty close. So I would write this out. You see that moving averages are crossing right about here. So I would probably exit right here, and this is about a 5-day contract. There was a difference in price by $5.89. Let's see, what is the difference of $5.89. So let's change that price to, let's just do $2.96. I don't know if we had done it already. We probably did this one already. Okay, so yeah, that one's about $561 for that trade. So you can see how profitable this strategy is, especially when you're trading McDonald's stock. But let's go look at a couple other stocks. Let's just do my good old favorite of the S&P 500. Okay, let's see. And this strategy will work for any stock out there. It all just depends. Okay, so let's look at this cycle right here. Okay, let's say we see it crossing right here. Let's draw a vertical line right there. We see it crossing right here. And we want to double check and look at the lines and the moving averages, and it crosses in that direction from here to here, so you know that that's a good trade. So basically you can write it out from here all the way up here to where it crosses again. But that is an 8-day wait. Let's just shrink it down to a smaller, let's just say you did a couple days contract. Let's just do 4 days. 4 days. Here we go. So let's see, 4 days. Okay, come on. 4 days. This might not let me. Here we go. So 4 days worth of this trade of SPY. It was a difference in price, 366. So let's just average that to 4. So let's look at SPY real quick. Okay, so that was, oh, I don't want to do a put, I want to do a call. Okay, so we got a, let's just average that to a 4. Okay, so let's just make this 437. $437, so that is a $358 move in 4 days. So let's just do this one more time with SPY, and then I'll choose another stock. And let's see. Let's just do this one right here. We see that it's crossing up. So we're going to draw a vertical line right where it crosses on the RSI. Okay, so next thing we want to check is, does it look like it's about to cross in that direction? And we can see that happens pretty much a couple hours later. So you could have got in here. So this is a quick, is that crossing? Yeah, it looks like it did hit. So this is a quick one. So it basically goes from here, and look at the moving averages, to about here. This is, let's just do, that's 6 days. Yeah, I guess I'll do 6 days. You would have to buy your contract for 6 days, but the 6 days, there's an $8.84 difference in price. Let's just see 8. Let's just do 8. Okay, so this is about a $765 move. So anyway, I think that's all I'm going to do today. I think this strategy is very profitable in my opinion. I'll probably be making more videos about this strategy because I do find it very profitable. I am personally I haven't started. I've been looking at the charts. I haven't personally done it with this strategy yet, but I will be starting that up in about a week or so. So whenever that does happen, I'll probably make another update video. But anyway, I find this strategy very, very, very helpful and very, very profitable.